All right, hi everybody. Welcome to the IC Topic Chats for Thursday, Cinco de Mayo, May 5th, 2022. I can't believe this is the case because I feel like all I ever do is talk about business structures, and I know I've given this as a call, as something for our Meet the Pros session, and but I didn't have a PowerPoint presentation for this, and this may be the first real time we've ever spent time talking specifically about corporate structures in the IC topic chats, which kind of blows my mind because I feel like we do talk about it often. But that's what we're going to do today. By way of like hands, who's actively thinking about starting a new corporate structure, or has no idea what they're doing, or is looking to make sure that they formalize something, just so we know. Anybody? I see Miranda, I see Linda, Robin, and Katie. Good. Well, that's good to know. And I'm going to also start by saying today, I am not a lawyer, and you need to reach out to a small lawyer, like a small business lawyer. The lawyer can be any size they need to be. The lawyer should specialize in small businesses. If you don't know who to reach out to, well, go back and read what just happened on the the E-Group listserv that Independent Consulting had. That was just a question: how do I find a lawyer? So read through that series of emails. There's been a lot of information there that I haven't really spent time with. But also go to your small business development center. That's what they're there for. They might even provide you with a lot of this stuff for free. I don't know where we're at with COVID funds, but a lot of our small business development centers have money to work with you for free. They will just provide you free consulting services. So reach out. If you don't know what to do when you're trying to change your small business up, that's what they're there for. So they might be able to provide you with some direction on that. All right, so that being said, I've absolved myself of any legal responsibility to whatever you plan to do, so I will provide you with what I know. And I'm also going to start by saying, feel free to challenge me, particularly those of you who have gone through this process. If it sounds like I'm saying something that you don't agree with, definitely challenge some of these thoughts. I know what I know, and I'm, again, not a professional in this area, and I have opinions. I've done some research on this. I've thought about this. People have told me their opinions on these things, but at the end of the day, all of this is open for some level of interpretation. So let's jump into it. Use that slide. There we go. So different kind of structures I want to talk about today are the sole proprietorship, which is often called a sole prop. Everything has a short acronym, by the way, a cute shortened acronym. Partnerships, and then I'm going to talk about some corporation structures: a SCorp, a limited liability corporation, which is often called an LLC, an S corporation, which is often called an SCorp, and then a B corporation, which, by the way, is not its own corporation. It's called a B Corp, and I'll go into what that is. But it's not a IRS recognized structure. Nonprofits, and then research institutes and centers. Most of us start as sole proprietors, okay? And that's basically, I started up a business. You may be considered a sole proprietor just by setting up and doing just a side hustle. If somebody says, here's $5,000 to get this evaluation done, they're going to ask you for a W-9. You'll be what they call a 1099 employee. And so you are a contractor to them. You're kind of already on the process of setting up your sole proprietorship. The advantage is it's pretty easy to create or terminate. So at a certain point, you actually want to start in its own business. So just setting up and having contracts on the side, there's nothing wrong with that. If you have a full-time job and you want to do this in the evenings, you want to do this moonlighting, if you're working part-time, if you're a student, setting up before you even get to the point of starting a company or any formalities, you're just a contractor. And I have several people who work for me on the side and do work for us, do some data analysis. And I say, here's $2,000 to do this X amount of work, and you're going to do some analysis and get back to me with some results, and that'll help inform how we develop our report out. And we do that all the time. At a certain point, you want to start up some sort of a business so that you have an identity and you can communicate who you are to people. And a sole proprietorship, you would have a name. You could set up a checking account. It's still just you. It's just an extension of you, right? You may or may not have your own federal employer identification number. You may be still using your social security number for taxes. And almost all of us start as a sole prop until it gets complicated, and then we start getting into corporation structures. And so this is where just about everybody I know starts. In fact, some of our ICTIG members have been a sole proprietor for 20, 30 years, and they don't ever intend to change it up because they figured it out and it's fine with them. I think there's reasons after a while, if this becomes your full-time job, that you want to move away from it, and that's my opinion. In fact, it's a strongly held opinion, and I'll tell you why in the next slide. But they're easy to create or terminate. They're cheap. They're completely under your control. Now, the one thing that you should know is that they are an extension of you. They're not their own separate structure. You can't sell your sole proprietorship very easily, at least as far as I know, you can't at all. You might be able to transition it to something and have some sort of informal process for transitioning something, what you do to other people, but it doesn't have an identity. Can't borrow money. The tax issues is that, and I think I typed that in there, you may be paying more in taxes through this process. So once your business grows, you probably want to set up and have something that limits your liability and kind of protects you a little bit. I've got some notes here I want to put in the chat for you. So I know a lot of you probably are thinking, what's my first step to starting this up? This is something from NOLO, which is one of those legal sites. And where's the chat going? There's the chat. And I see your questions coming in. Thanks, Miranda. I'll get to your questions and everybody's at the end. By the way, I didn't say to do this. If everybody could type in your name and your organization, if you have one, where you're located, into the chat, and then we'll have that for our records for later. Anyhow, this little link I just put in here is kind of how to establish a sole proprietorship, at least in Illinois. I think you're going to find it's not that much different in most states. My experience of starting at my first sole proprietorship was I went, you know how you do this really? You go to your bank and say, I'd like to set up a checking account for my business. And they go, okay, well, where's all your documentation? You go, oh, I don't know what I need. And then they'll tell you. That's the easy way. You can do the same thing by going to the Small Business Development Center in your community. They're usually located as a part of a university, or they may be part of a regional community, like maybe part of a larger town structure. But there, you can just type in SBDC and then enter the name of your town and something, or your county, and it'll pop up. So that's what I would do. Oh, Kurt's here. I'm so glad, because I'm going to want to talk to you about LLCs in a second. All right, so I think you guys can see my notes there. Let me take that down. All right, so let's look at the next slide. So the reason people move away from a sole prop is because of taxes, liability, access to capital, and to have some form of security and continuity around your organization. So when I say taxes, oftentimes you're paying more in taxes because all of your income gets treated all of the income is treated as personal income, and you may be paying a higher income tax on your personal income, either to the federal government or to the state. Again, everything's going to be different based upon where you live in your community. If you're in Texas, you don't have personal income tax, so maybe it's totally different. I don't understand how that works, but at least federally, you are going to be paying more in income taxes. You have liability as a sole proprietor, meaning if you do something wrong and you get sued for your work in ABC company or whatever you're representing yourself as, they can go after your personal assets. And that to me was the main reason, one of the main reasons I wanted to set up a corporation, because I wanted to be able to protect my children's college funds in my house. Because if I don't know why I would do something stupid. I don't ever plan to do things stupid, but they happen. I want them to come after the company. And the company, that's fine, that totally makes sense. But I don't want them to come after my wife's retirement fund, which conceivably could happen. You have access to capital, meaning you can borrow for your company. Most of us don't really need to do much of that, but I do have a line of credit. And then it also is there's some security and continuity, meaning you see my company, it's Goshen Education Consulting. I wanted to have a company that was bigger than me, and I actually do now. I have staff, but from the outset, I knew that this wasn't going to be about Matt Feldman. It's not Matt Feldman Consulting Incorporated. It's Goshen Education Consulting Incorporated, and that's why we ended up doing that. All right, so let's talk about some of these different structures. Actually, the next one is not a corporation, it's a partnership. Partnerships are a bit more like sole proprietorships than they are like corporations. They're relationship based. It's based upon those individuals. So if you and your best friend decide to get together and start a business, you might say, well, let's go 50-50 on this. Well, if your best friend decides they no longer want to do this, well, your partnership needs to end. It can't just be transferred easily, you know? You share your profits based upon the way you set up your original structure. And so hopefully you're both spending the same amount of time in this, because if you set up a 50-50 structure, 50% of the profits need to go to your best friend. My experience is people don't stay best friends for very long when they start up partnerships, and I don't recommend partnerships, or only very rarely do I recommend a partnership. There's not much red tape. Again, it's a bit like a sole proprietorship for 2 or more people who come together and work out an arrangement for their organization. I think there's more cons than there are pros. I once heard that if you were going to start up a partnership with somebody, why don't you and your best friend both start up your own LLCs, limited liability corporations, and just agree on what you're going to do individually, and that way you can keep your finances separate. It's a bit like getting married, right? Do you really want to get married to this person? Because you're now getting into bed with all of their finances and everything, and if they get sued for something, you get sued too. All right? So it is, in my perspective, it's better to be in charge and then bring people in under me, and that's where I am right now. But as far as a partnership, I always have some concern over splitting finances with somebody, particularly if I don't know how much effort they're going to put into it. You better have a lot of trust with this person. Next one is a C corporation, and I'm just going to tell you what they are because you should know what it is, but I don't know anybody, and I can't think of any situation where any of us would really want to be a C corporation unless we get really big. I mean really big. So a C corporation, these are your typical old school corporations like IBM, McDonald's, Walgreens, and things like that. If you plan to go public, right? Going public meaning you're going to issue stock to on like the NASDAQ or New York Stock Exchange or something like that. It's preferred by investors. There's a double taxation issue, meaning the corporation gets taxed, and then the income you take out of the corporation as a shareholder gets taxed, so you get taxed twice on any income. You need to have a board of directors. That's not that unusual. And there's a lot of strict rules about meetings and keeping records. And there's a lot of filings. There's filings that need to happen for people to be able to see what's going on with your C corporation. One of the advantages I didn't write in here is it's good for property. People, if you're going to own a lot of property and you're going to buy and sell property, McDonald's is actually more, people don't know this, McDonald's makes its money on property. It doesn't make its money so much on hamburger sales. Hamburger sales are the way it encourages people to lease property from them. But anyway, that's neither here nor there. It's good for property because you can, let's say you own a property for $200,000 and you do some things to develop it and you sell it for $300,000, well, that money can stay within the corporation, and then you have a certain amount of time, and then you can buy another property and you continue to grow your wealth within that corporation. The problem becomes when you need to take money out of it. And that's why people say, well, I have all this, but I've never paid taxes on it personally. That's because they've never realized any of the profits personally. They keep it all within the corporation. Let's get into the LLC. Now, most people who leave the sole proprietorship will go into an LLC. And oftentimes this is called like a single member LLC. Pros is that you have maximum flexibility in how you manage and run your business. It's a bit like a sole proprietorship. Usually it's like a one-person situation. You do not need a board of directors. You do protect the liability, meaning people would have to go after the corporation before they can come after you. You do have ongoing filings to stay in compliance. Your income is taxed as an LLC, and it comes through to you as a personal income. So you aren't set up as an employee within your corporation, which is what you'll see in the S corporation. You don't need to be an employee. You just can realize income that way. Now, LLC is not, I don't know as much about LLC, and I'm going to ask when we get to the comment period for people to talk about their experiences with LLCs, because I went straight from sole proprietorship to SCorp. And I can talk a lot about my experiences with this because I've been in SCorp for, I guess, 12 years now. It's preferred for small companies with payroll. It gives me growth potential. I was a one-person SCorp for 8 years, and I'm currently a 9-person SCorp. And so I haven't had to make any changes to my corporate structure. I do have a board, and people think that's a con, but in many ways it's a way to force my wife to talk to me about what's going on with the business, because the board is just my wife and I. I could broaden it if I wanted to. I don't have to. You need to have more than one person involved with it. There's more administration than the LLC. And the board of directors, so you need to meet on a regular basis, but it needs only be like once a year. I'm in a position now where I meet at least monthly. That's because we've got a lot of things growing and developing within the business. And I take minutes and I have an agenda and I stamp it with a little thing and I put it in a booklet, and it's pretty good. Now, piercing the veil, that's the phrase that if you talk to a lawyer about starting up an S-Corp, they're almost invariably going to bring that phrase up. What that means is you can't pretend you're a corporation and just operate like you're a sole proprietorship and get the advantages. You have to maintain records. You have to file an annual report, which for me is just a one-page, and it really feels like it's just another way for the state to make an extra $125 off me. You do have to file that annual report. And if you ever get sued, they're going to come make sure you're operating like a corporation, because if you're not, then they can pierce the term piercing the veil means they can go after your personal assets just as if you were a sole proprietorship. So you need to do the things you're supposed to do to maintain the corporate structure. Often, even if you're a one-person operation, you need to do those things so that people can't come after you if you find yourself in trouble. It used to be a lawsuit. They would only go after the corporate assets. Now, a B Corp is the next one. Now, I want to make a point to say a B corporation is not an IRS designation. This is something people elect for their organizations. And it's a bit like, I think of it like accreditation. You want to be recognized as an organization that has a public benefit, right? It helps build trust with your consumers and your communities. Maybe it helps further develop who you are as an organization and helps give yourself guidance. Might attract and retain employees who want to belong to something that's more than just a for-profit evil organization, right? And there's value. People perceive there's value in that. If I can say I serve this community of people and I give back in a way that is consistent with these values associated with people that are identifying me as a B Corp, then that's valuable to me. I feel like I'm part of something great. I have not ever really thought that I would want to go into a B Corp, but I know a lot of people who do, and they feel very strongly that it's a great thing. There is administrative costs. You need to maintain your structure with whoever is recognizing you as a B Corp. There's legal requirements. You don't get tax breaks like you're not-for-profit. It's kind of like operating like a not-for-profit, but still being a for-profit. And there's a heightened level of scrutiny. So if you say you're a B Corp, the activists and the people who believe in your cause generally are going to pay a lot more attention to how you operate. And they may be saying, hey, wait a second, why are you doing that when you should be doing this? Even if they're completely, off in another world and they don't know what they're talking about, you are going to attract attention. Hopefully you're attracting mostly positive attention, but it could be negative attention from within your own community. I'm just reading some notes that I put here. So you are still making a profit, but usually you disclose how you're going to use your profits, and perhaps you might say 10% of my profits are going to go back to this worthwhile cause. Nonprofits may not become benefit corporations unless they switch to a for-profit structure. So if you're not-for-profit, I don't know why you'd want to be a B Corp, because a B Corp is basically kind of like, it's sort of like a hybrid between a corporation and a not-for-profit. And with that, let's talk about a nonprofit. If I can find the button to move to the next slide. All right. So a nonprofit. I've actually started several nonprofits. I'm in the process of starting another one right now. Goshen is my main organization. One of our nonprofits is STEM Camp. STEM Camp is a summer camp program that we do for military connected communities, and it was a grant that we got from the Department of Defense. And it is Goshen. Goshen is the umbrella organization for STEM Camp. But STEM Camp is really a nonprofit, just operating within a corporate structure. So we're slowly pulling that out, and that's one nonprofit that I've started. We also started the Evaluation Association of St. Louis, also a nonprofit. So different kinds of nonprofits. I mean, I think we all understand the pros of a nonprofit. You don't pay taxes. You do have that limited liability. You have a focus on a social mission, right? Whatever that social mission might be. The not paying taxes, I guess it depends on your designation. You'd need to be a 501c3. So our EASL, the Evaluation Association of St. Louis, is a 501c5, which is a membership organization, and we don't get the tax benefits of a C3. But the real con is you have more paperwork, you have more public scrutiny, you are subject to more in the way of audits. There's more in the way of disclosure. When I say paperwork, there's more in the way of disclosure of your finances back to your state and to the federal government. So you need to file reports. You do need to have a separate board of directors. It can't be just you and your wife like it is for me. And as I've put it, and other people have put it, why would you want to start a non-for-profit and have all that extra scrutiny? Because everything slows down. Everything needs to go through a board, and boards are notorious for slowing down your process. Now, hypothetically, they're better in the way of just helping you make a good decision about how things are going. But if you want to move things quickly and you want flexibility and you want to run your own show, which a lot of us, that's why we start our consulting practices, a nonprofit may not be the right process for you. Here's the other thing. Let's say you have a budget of $100,000 this year, and you have a fantastic year and you make $200,000. Where's that $100,000 in profit go? Well, it has to go back into whatever the mission is for the nonprofit. You don't get to just say, well, I'm going to take home a big old $100,000 bonus. It doesn't work that way. You don't get to keep the profits. Now, nonprofits are notorious. Also, successful nonprofits are notorious for paying their executives very well, but it's all going to be within the public eye in that situation. You can't just pay yourself really well and go about your merry way. Although people do that, and they end up, they still have to do the public disclosure. And at certain points, people go, why is this person making $300,000 a year for that corporation, for that nonprofit? But anyway, neither here nor there. Let's see, next one. I put in this last one, Research Institute and Center, because a lot of the people who particularly come to the pre-conference workshops represents university research institutes or centers. There is some value here, and I'll tell you my quick story. When I first started my company, when I first started doing this consulting work, I was working for a university as a director of institutional research. And my first impulse was to create a research center within that institution. I said, I've got all this consulting work coming in. Why don't we create an evaluation research center as a part of this? And it quickly became obvious that that was a bad idea for me anyway in that institution, because it's a small institution. They didn't have what we did as a part of their mission, right? Necessarily. It would have been an extension. And I wasn't getting the support I needed from the senior leadership at the institution. And so I remember getting ready to write this memo saying, this is how much money you're walking away from by not, doing this. And I thought, if I'm going to make that much money, why would I want to give it to those folks when I can have it for myself to figure this out? And I said, I guess I'll go figure out how to start a business, which is kind of where I started the process of becoming an SCorp. The pros to a research institute and center is you're going to have organizational support. You'll have oftentimes an accounting department, people who can do your accounts receivable and your accounts payable. They may or may not be an advantage. Frankly, a lot of people I know who have research centers feel like they're more of a pain in the butt than they are to be an advantage. I don't know. Prestige, I think you could say, well, I'm part of like St. Louis University where I'm located. That's prestigious in my community to say, hey, I'm Matt Feldman with SLU, right? St. Louis University. That carries a lot of weight with it. It also carries a lot of burden. It helps with recognition, right? So people can, when they go to find you, and they see that you're with SLU, instant credibility sort of a thing. And also, one of the main advantages, I think, I didn't put it in here, I'm thinking about it as I'm talking, is that if you work for an institution, a larger institution, you may become kind of like the preferred source of activity for the people within that organization. So if you work at I'm going to use St. Louis University. If you work at St. Louis University, when the curriculum and instruction department, the education department, faculty get a grant, they may come to you if they can, if there's no limitations on it being external to the institution. They'll come to you, and they will obviously come to you first because you're there almost as an organization to support them. I mean, the red tape, the expense, the oversight, and the overhead are huge cons. And it's why, in fact, I just was in a conversation with a client who works for an institution, and she's thinking about how she can leave the institution and take what she does. And we have some other clients who just did that from an institution here in Illinois. And it's because of these things. The overhead, meaning it's expensive. Your facilities and administrative rates oftentimes are at 50%, meaning for every dollar you receive in direct expenses, you have to get another 50 cents from that funder to go back to the institution to cover vice presidents for administration and for their grant department and for the expense you're paying for the building you're in, which is perhaps more expensive than it needs to be, for the grass to be mowed, all these things that are overhead, your oversight. And actually the oversight can be good if you're getting direction, but oftentimes the oversight is yet another person you need to report to about what you're doing, that provost and that vice provost. They'll have discretion over what you do. They want to tell you what you want to do, and so that's kind of a pain. You don't have that independence. The oversight, if the president or the board wants to go in a totally different direction from where you are, well, you're stuck. But the other piece of this oversight is you're just going to be asked to be on committees that have nothing to do with what you're doing, and so that's a pain. It's expensive, which also goes back to the overhead, but just the expense of what you have to do and the contracting. You have to follow the regulations of your organization. You may need to hire people that are more expensive than the way you could do it in a system like I'm in, and just red tape, which is kind of what I've already been saying. So with that, I will talk to you about what's coming up next. Thank you for this. And I want to step out. Next week, make sure you show up because Rita Fierro will be talking about her new book. And she's going to be talking about, and this is her title, Digging Up the Seeds of Fear in Our Consulting Practice. And so I'm not really sure what to expect out of that one, but Rita's been I see TIG chair in the past, and she understands our needs, and this is an opportunity for us to talk about, for us to hear and talk about more about her book. In 2 weeks, I'm going to be talking about the old survey. It was from 7 years ago, but I still think it's relevant today about the quantitative data. And actually, when I say quantitative, the quantitative data are almost all financial data. So if you want to hear about fees that people charge and things like that from the 300 plus people who completed the survey, you're going to want to hear about that. One of the things I've talked about before, but I'll talk about in this is, average or mean or median fees that people charge in different parts of the country and across North America, and things like that. Give you a better sense for that. Anyhow, you can see the other things that we're going to be talking about coming up. And with that, I'm going to stop sharing and I'm going to stop this recording.